You know that Euromoney and the World Economic Forum have a direct line to many of the world's business leaders. So it will be interesting for our viewers to hear that what is your respective team views on the last quarter and where do you think we're heading in the first quarter of 2021?
Yeah, I can only share my personal observations, right? I don't speak on behalf of the institution, but I think one of the major challenges that we're seeing as we're still living through the pandemic, right? And I think that's very difficult to realize sometimes when you sit in this part of the world here in Asia. When you sit in Europe and North America, you're going through the third, fourth wave at the moment, and that there's very little visibility to when that situation will end, right? So even if you have a vaccine, and we all know that's going to take time to reach people, some of the vaccine candidates you need a second shot, etc. So this will take considerable time, and I think what we're now seeing is that becoming a very real challenge for organizations. So if you have a global organization with an operation here in Asia, with an operation in Europe, and with an operation in North America, how do you keep these different pieces aligned? Folks can't see each other, right? They interact virtually. Their living realities are very different here in Beijing. We've been in the office since April or March even. Folks in North America or Europe just haven't done that in 6-7 months, and they're probably not going to get back to an office environment anytime soon. And that creates real challenges in terms of alignment, in terms of spirit, etc. And the second piece is, this becomes a bit more concrete now after the more high level perspective. We haven't really seen what happens once stimulus runs out, right? And we're slowly entering that phase, right? And then the situation will look very, very different. Unemployment will become very real. A lot of businesses will go away, right? And we're going to come back to that dynamic that was discussed in the earlier round of questions of some companies coming out of this very well, and some very, very challenged or non-existent. And again, that's not something we've seen yet, just because stimulus measures and support measures were held up until now, but that's going to be a big, big challenge for them. And then the third reality is around vaccines, I think. Some countries have started vaccination programs, right? Others are in the middle of approving. In Europe, for example. Here in Asia, it will take more time. There's less of a need to roll out vaccine programs. So what does that mean? That means that the next phase of recovery will look, again, very, very different depending on where you are in the world, with some parts of the world not having access to a vaccine until 2024, and that's also the developed economies. So what I mean by all that is, I don't have a clear answer for you of what the transition from Q3 to Q4 will look like, but there's a lot of unsolved questions. And we're now moving into the space of where we have lived the pandemic, but we just don't know really what the recovery will look like. And this theme of we don't know, I think that's going to stick with us for a very long time. It's the same when we look at policy responses, right? We haven't understood or even begun to understand what the policy responses that were given to the pandemic, what the consequences of those are, and we still have to examine that. And we don't know at what point monetary policy will return to some sort of normal, probably not for a very long time, and what are the implications of that. So there's a lot of things that we need to figure out, and we're going to keep going through this forest in a very step-by-step basis, figuring out what the next step is going to be and what that environment will look like. So uncertainty is here to stay, and with that, I think that's probably one of the lessons from this pandemic. It's just getting comfortable with that and maneuvering through that without having any sort of long-term stability.
Good. I think Kai already shared many of the thoughts. I like to be the later part because I just need to stand on previous, obviously, giants' shoulders, just add on a few more points. I totally agree with what he said. Definitely there's no such a conclusion ready for next year, because people used to run for, I have a year plan for next. Now seems it's not working anymore. And maybe you asked me, that conversation happens a few weeks ago. Maybe I'd be more positive because vaccine is really available to the market. But just see, London had just a lockdown again. So a lot of changes, German, Italy getting a lot worse. So that's make a lot of difference. But I would like to add more point because we had global capital publication just had a annual say outlook for next year and also some of the conclusion for year 2020. We see such a huge amount of debt, the bond will be issued in this year. And the government just trying to keep the liquidity floating and trying to protect, all the business keep running and less bankruptcy, and also particularly keep the medical system up and running. But they're facing the problem, especially some of the emerging countries. The facing challenge is the rising, I would say, debt to GDP ratio. They cannot stand it. How they can be fixed, no one knows. Maybe IMF in the past can fix it, but if the massive of the emerging market has an issue, this is a really big problem. I think I will leave the question to the really big guy to make that dialogue, but this is something I worry about. But I worry about most is once the vaccine really taken effective, some of the countries start say whether I need to keep inject the liquid or I start to keeping less or stop. Because in the last year, the stock market is good and the cryptocurrency is also good. If that things happen, what will happen? I have no conclusion. Maybe it's falling for the traditional capital market, riding for the digital. I don't know. So let's see, because in this March, the Bitcoin also falling the same time. People will say this is should not be happening, but it happens. But I'm interested to find out. So maybe I just leave an open question for these things rather give a conclusion. But yes. One more point I would add on. One good things could be accelerated because of the pandemic in that capital market says. Responsible and I would say sustainable investment could be more powerful. In the past, yes, in Europe, many of the institutional investors like it, but I think this would expand to any, especially like Asian market. We can see many of the social bond issue, and people really think it's a responsibility to invest in this kind of asset. So this asset will be good. So this is something I would add.
Yeah. So yeah, just to comment on Romeo's points. Last year, this year, in 2020, we always say that Bitcoin itself has very low correlation with all of the other major assets like gold, S&P 500, and all the others, and the correlation was always between that range is just a positive and negative 0.4 to 6, and that's it. And but in March when you mentioned in March after what happened was the whole global economic situation, we also saw a very big fall on Bitcoin price, and then it went to almost 3,800, and it was a bottom low, and then now it came back to a historically high price for Bitcoin. It's I think today I believe is $23,000 per Bitcoin, and it's a lot of reasons behind it. So first, we know that during this whole pandemic, a lot of investments were shifting from traditional to digital, and that's one of the reasons. And secondly, we've talked about this before, that we saw a lot of institutions are coming to the market right now, especially listed company and funds, and now we have 18 listed funds and companies who are holding Bitcoin, and they announced that they hold Bitcoin, and the whole total amount made up to 4.2% of the total circulating supply of Bitcoin, and that's such a huge change of just a customer structure from 2017 until now. And also, I think one of the other reasons is because, you know, now we saw a lot of countries are giving clear and more easy to follow guidelines and regulations for the market, and it's becoming more mainstream, and we have clear rules and regulations and licenses, and that's how we can then become the bridge, really connecting, you know, traditional money, old money, and the digital currency part. And also, I agree with you guys. It's really hard to plan a whole year ahead, and that's why, you know, we'd like to talk to you guys and gather great brains together and talk about, you know, annual outlook. And we've learned a lot from this year. You know, from the beginning of this year, we were all talking about how we're putting globalization as one of the top strategy for a firm, and you know, just unlikely it couldn't really happen given that nobody can travel. But then we figure out how to really work with different time zones and work decentralized with all of our local firms in different countries. And from that, and from a lot of the online conversations and more in-depth conversation with our users, now we're learning their habits, learning their trading habits, what their needs are, and now we have a deeper understanding of how a international and global product should look like. It's never just a different, you know, format in different language, but really tailor those products and listen to what your community is asking for. So I guess we all learn from this whole pandemic year, and I think, you know, going forward, future will be much brighter. So my next question is to everyone. So if the pandemic has pushed along the digital wave, do you see blockchain and cryptocurrency space taking the lead in a financial sense? So for example, we have seen institutions invest in BTC as a hedge. So let's start with Kai.
Yeah, of course, it's going to play a big role, right? But we have to figure out what the exact role will be, right? I think we just heard a lot about Bitcoin as a potential hedge against inflation. That's certainly a very big focus area, and I think right now that's where the focus should be. However, we haven't seen inflation crop up yet, right? And the new normal of monetary policy that we're now living through really started with the great financial crisis global financial crisis 10 years ago. And now we're seeing a sort of version 2.0 of that, stepping even farther into QE measures and new tools. However, that originated 10 years ago, and the fear was the same: that will create inflation that we need to manage. However, we never saw that inflation really play out. So I'm very curious right now whether that's going to hit us this time and when it's going to hit us. And at that point, of course, then the interest in alternative means of wealth storage will spike again. So this story is to be continued, and I think we're going to see how it plays out. Just like we said earlier, it's probably too early to make a precise forecast on what that story will be. And then when you think about currencies as a means of payment, I think we're going to see a variety of different strategies being pursued. And you alluded to, of course, the focus of central banks on developing central bank digital currency, and I think that interest clearly has picked up over this year, and almost every central bank globally is looking at that space, employing very different models, interestingly, right? The Chinese model is very different than what the Europeans, for example, are looking at. The Fed is currently coming around, I guess. So we'll see what model is successful. We have to solve for the interoperability, right? And how far can these models go beyond national borders? But have individuals really embraced digital or cryptocurrencies as means of payment? I'm not so sure yet, just because there is other means out there to pay. Digital payments per se, that's not a crypto play, right? So we'll see how that space evolves. So I'm much more focused on the wealth preservation part and what cryptocurrencies and digital currencies allow us to do in terms of hedging. And then the rest is going to unfold. And I think one thing that we shouldn't underestimate is if we have the private efforts, we have the central bank efforts, but we also have the existing infrastructure, right, that has been built over the past couple of decades. And of course, there's some players who are deeply invested into that infrastructure, and they will go to great lengths to preserve that infrastructure, make it more efficient, make it faster, make it cheaper to access. So if those are the three major dynamics playing out, then I don't think we know yet what horse will win. And here at the forum, we have a Global Future Council. We have a group of experts from the industry and the public sector space on the financial system that think about that very hard. And they're very focused on these three dynamics and exploring which one of them will be the most promising. And I think we're seeing a lot of starts and stops, and we haven't really figured out which of these three really will win the race. So it's an exciting time. This year has brought us a bit more clarity, but I don't think we're anywhere near the finish line yet. And maybe it's going to be all three of them competing with each other, which might well be the case.
Yeah, so Kai definitely see that, Bitcoin is going to play a big role, in hedging inflation. I'm not so sure yet about the payment, payment role of digital currency yet, and very interesting point. So let's hear from Professor Chen.
Yeah, I think there are some challenges. I mean, as I mentioned earlier as well, Bitcoin provides one of the few alternatives as a store of value, although the volatility so far is still too high for Bitcoin to be a mainstay or main instrument for people to store value in addition to stocks, bonds, real estate, and so on, because to a large extent, real estate and bond prices are much more stable than Bitcoin prices. So that should make the challenge much bigger than we would like for a much wider adoption of Bitcoin. But there are also other practical obstacles. For example, I think in the US, the tax authority, the IRS, the Internal Revenue Service, has been, I'm pretty sure, watching very carefully. I know last year, for the first time, in filing the tax return, there are several boxes you have to check. They are all about whether you have any Bitcoin or some cryptocurrency anywhere. If the answer is yes, then how many units of this and that? So they are paying attention to this. So this is why I over the last few years, I've been saying to many promoters of cryptocurrencies that they first have to find some ally or allies in the US and some other key countries so that at least some of the more conservative politicians will be convinced that there should be alternatives to sovereign currencies in order to allow more room for liberty and freedom, especially across national borders. So once they become allies and supporters for cryptocurrencies, then they can put pressure on tax authorities in Europe, in the UK, in the US, and other countries. Otherwise, the tax authorities can be the main obstacle to make the wide adoption of cryptocurrencies really possible. I know for many years, for billionaires and rich investors in China, this has not been an issue because taxation on global income, so to speak, for Chinese citizens has not been enforced so strictly at all. But with new technologies, I know they are getting better and better. I think very soon, all the tax authorities in the different countries will be very busy monitoring who has more Bitcoins and who has not really paid tax on such profits, right? So I think there are some contradictions between the very nature of decentralization and anonymity of cryptocurrencies and the demand by tax authorities and law enforcement agencies in almost every country that you should make all your investments transparent, at least to them. You should not be able to hide anywhere where they cannot, check and verify at any time. So there are some, in other words, there are some legal obstacles and tax authority imposed obstacles that cryptocurrencies still have to overcome.
Okay, so follow with Professor Chen. I answered back to you, Sierra. I may answer in question in respective ways. You ask about whether the blockchain technology, cryptocurrency, and also Bitcoin was be taking the lead in the year. I think for the technology side, blockchain definitely is something. I think they will take in lead and grow fastly until another new technology can really overcome. But until now, we see this is in the really fast growing track. So that's no doubt. There's a lot of potential development. For cryptocurrency, because it doesn't equal to Bitcoin. Just like Kai said, different countries, different regulators, different obviously central banks, they have their own definition of digital currency. I just heard a speech from an ex-senior officer of China's regulatory. They are thinking about use this China's DCEP to do some testing like cross-border payment things. It's not just domestic alone. So if that happens, that's really change a lot of things. So I would say digital the cryptocurrency will go different way. It's gambling. I think it's competing different, I would say, countries. Everyone may want to adopt their own things and try to influence the others, then make sure everything could be aligned, but it takes time. So let's wait and see what it can be. But Bitcoin, I would say it is good thing for the return for especially for this year, and basically it has like 6 times or 8 times return from the lowest time, and the price going to be sky high. But it doesn't have a complete cycles. When to be more mature, it has gone through rounds of cycles, which is good for more investors, the mature institutional investor, to understand what the rule of the game, and they come into that market. But the good thing is, just like you might mention, the MicroStrategy, some of the professional firms already into this market, and they take it as an alternative asset, which we, from our observation, my personal things, is find out the definition for Bitcoin as asset class becomes more clear, which is good, which can attract more institutions to adopt some of the protocol into their portfolio investment strategy. So I would guess more and more institutions will come into this market. But let's see how the cycles come. The cycles come rounds and rounds, which can be make this this is a business, this is assets more mature, which I'm more optimistic for this asset class in the long run.
Yeah, very good point. I agree that Bitcoin and other digital assets definitely need more times of proof themselves. Like it's only been 10 years since it ever existed, and all the cycles is very healthy for its development. And I agree with Professor Chen, that for it to be more widely accepted, regulations development is very important and crucial as well for taking more institutions or for retail investors around the world. For example, like we see such a huge change in Japan before they issue licenses to exchanges and have clear regulations, because the country itself has very strict rules for especially when it comes to financial regulations. And we have a local exchange, Huobi Japan in Japan, and before we get the license, there were only early adopters testing out and trying out digital currency. But after we got the license, and after more digital assets are getting financial regulated approval, we saw user base increase dramatically. And I believe this is going to be the same for users around the globe, not only in Japan or in countries like the US, where regulations are pushing forward a little bit faster than the others. And I believe that for cryptocurrency itself to really taking lead in the financial sense, not only for regulations, but other infrastructures as well. For example, products, right? We know that for institutions to trade, they need more professionally developed products. And not only for spot market brokerage, they need futures trading, they need swaps, they need options. And that's why, Huobi has been putting a lot of efforts and resources to develop this whole ecosystem for different financial products, lending, borrowing, staking, all of this for institutions. When they come into the crypto world, they have a complete set of services and products ready, and we have a team of professionals who can deliver and provide same level of professionalism to help them getting into crypto. And also, speaking of blockchain technology itself, I think it's very good and natural for improving financial system efficiency as well, given it's decentralized and it's more efficient. And it just all of those developers in the industry have been working on improving transaction per second, so that it can be more widely used when blockchain can have a major impact in the whole financial system. So we are so glad and looking forward to see more firms like MicroStrategy to coming into the crypto world. And
yeah, let me ask you a question, because you're asking us a lot of questions. You spoke a lot about the dynamics, right, that are behind the renewed interest in cryptocurrencies, like institutional demand, changing infrastructure, etc. You just talked about an expanding product shelf, etc. But we're also talking a lot about the valuation rise this year, right? From the lows that we spoke about earlier this year to now the record high valuation that we're seeing at the moment. How important is price in that whole conversation? I find it very interesting, right? Either there's a real merit to the product, and we're talking about building an ecosystem, and that itself is a conversation, or is it really the attraction of making money quickly and riding out this acceleration in price and asset valuation? How important is a price dynamic?
Well, of course, price is a big reason people get hyped around Bitcoin. So, we saw in 2017 when the bubble grew and essentially, popped based on people getting excited about the price. I think we'll probably see similar things happen again, but maybe, not as big. And the price is what get people so excited, and that is what media picks on. And that makes it a more snowball effect, and not only for people to get into the market for trading or participating, but also for talents as well. In 2017, the whole human resources structure in the space is so different than now. We saw more people who do startups and early adopters, but now we see a lot of professionals from traditional finance, like from investment banks, and people like me from I was working with BCG for management consulting, and we also see a lot of professionals from say Goldman Sachs, from Google, and like real good developers and financial talents in the space. And I think the price effect is definitely something that's attracting talents and people and users into the market. But massive big price spikes from Bitcoin will probably start to soften as the market matures. Romeo said, all the cycles is definitely, it's gonna be more smooth in the future. And the news would also get old. So in the future, I think we'll see other factors like make Bitcoin more attractive to investors. Hearing that MicroStrategy and a lot of the other listed companies investing in something you invested in before them is a good feeling. And I think this institutional legitimacy is appealing to everyone. And the continued growth in regulation as well as usage of blockchain will also make Bitcoin more mainstream and add to its legitimacy. I think we've covered a lot of the things that I wanted to ask you guys. So do you guys have more questions to me or anything else you feel like sharing to our audience today?
Yeah, I think we kind of make a good start. And just like Sarah just said, it's because we basically looking at many of the firms already be part of it, not just a MicroStrategy, quite a lot, like Guggenheim, we really see they coming into that market. So as a significant global exchange, you basically have more interaction with institutions, you basically serve them. So what you think, what will be the trend after 2020 in this asset class? Because I would say as an asset class, institutional will be paying more attention in their watch list to make investments. So maybe your thoughts could really help us to understand more some of the insight.
Yeah, so we've definitely seen a spike in futures and perpetual swaps trading. So from just some data, about institutional traders on Huobi exchange. When we first saw the trend of institutionals coming into the market, trading volume from institutions in the beginning of 2019 was less than 17%, and now it's more than 50% on spot. And then on futures is about 60%, and on perpetual swaps is like 65%. So that's how much the structures are now changing. And also it's no longer just about individual buying and trading small amounts of Bitcoin. There are some big names and big quantities in the exchange. And according to our futures, Huobi Futures brand, on their second anniversary report, since its launch at the end of 2017, Huobi Futures has expanded products offering include USDT margin swaps and also BTC coin margin swaps, futures, and also USDT quoted options, reaching a total trading volume in about 2.6 trillion US dollars as of December 1st. So what is most interesting to see that is among these various product lines of Huobi, the latest launch of the USDT margin swaps is growing strongly, with total of over 60 billion as of December 4th. And we only launched less than a year. It was only during March. And as we talk about, it was not a good time for crypto at all. It just, this product itself is very easy to trade, and it's more like because it's USDT margined, it's more connected from the traditional trading, products and also crypto. And we rose to see compete with some of the largest exchanges with this product launch a few short months. And pandemic also meant that this investor who do not want to borrow or buy coins in these circumstances has more choices to run their strategies. So that's about the things that we're seeing in what's happening in the market right now.
Thank you.
Mm-hmm.
What about in the new year, next year? Because as the pandemic recovery really starts, at least I hope in March, or by March or April, then I guess without more money being printed, the demand, the interest, do you think the demand and interest in a bit cryptocurrencies will go down somewhat in the new year?
Yeah, so seeing as 2020 was the foundation of institutional interest and growth in Bitcoin, I see 2021 being the same. And the results are starting to show, with the likes of MicroStrategy investing Bitcoin when there's only around 11,000 in August, means they have effectively also already doubled their investment in 4 months. So this kind of return is going to get more attention from other firms, and more are going to jump in during 2021. However, with Bitcoin breaking into new territory above 20,000. We don't know how it is going to go to react to different price points, and Bitcoin price might well jump around a lot in 2021. A lot of the things getting into account, not only just institutional investors coming into market, but also the halving event happened this year as well, and also the volatility we can't see for a while might return. So this will probably be both upward and downward, which will be useful for traders and would attract more volume of trading. But we are probably also going to see more significant breakthroughs with blockchain technologies and advancement of this new digital revolution. And also governments and companies are picking up blockchain to providing solutions. And this is due for a big boost and heading towards critical mass.
So you think I should wait before asking my Bitcoin friends to donate some money to support our quantitative history research efforts, because they will be even happier next year after the Bitcoin price goes up even more. Should I wait or should I ask them now, because now is a new high?
Well, I think it's not only about the price, right? Research can be weighted. Usually we should all donate to help with the research progress.
Okay, good. Thank you.
Yeah.
Are you going to accept their donation in Bitcoin, or are you going to ask them for hard cash, Professor?
From my experience, when they have a lot of Bitcoin wealth appreciation, they will be willing to donate in any kind. Cash or renminbi or Hong Kong dollars, yeah.
Yeah, and I think it's our responsibility to just promote more adoption for cryptocurrency as well. We're pushing for a lot of charity to accept Bitcoin as a method of payment and donation.
Good.
Yeah. Very interesting discussion, and I want to thank you all again for participating in Huobi Insider. Thank you very much.
Yeah, thank you for having me.
Yeah. Goodbye.
Bye.